Good morning, everyone. Welcome to a new chapter where we explore the stories shaping our world. Today, we're diving into the fast-paced world of business and technology, where one name stands out above the rest: Elon Musk. Musk, the dynamic CEO of both Tesla and SpaceX, has redefined what's possible in electric vehicles and space travel. He's made headlines as both a visionary entrepreneur and a lightning rod for controversy, constantly pushing the boundaries of innovation. He's not just a CEO, he's a global influencer whose every tweet on X, formerly Twitter, can move markets, spark global debates, and even shift the direction of entire industries. Musk's journey from near bankruptcy to becoming the world's richest person is a story of high risk, relentless ambition, and high reward. He's inspired a new generation of entrepreneurs to dream bigger and take bold risks. Musk's leadership has been praised for tackling big issues like climate change and advancing sustainable energy, but he's also faced criticism for his unpredictable behavior and controversial statements. Every decision he makes, especially those involving billions of dollars, becomes a global event, covered by media outlets and watched by investors worldwide. In this video, we'll break down Musk's new Tesla pay package, explore why his last one was thrown out by the courts, and examine how his outspoken politics are impacting his companies and their futures. We'll also take a closer look at the Trump family's latest business move, analyzing what it means for the real estate world and beyond. Plus, we'll cover a major deal that's shaking up the rapidly evolving AI industry, with new players and technologies entering the scene. These stories reveal how business, technology, and politics are more connected than ever before, shaping the future in ways we're only beginning to understand. Let's get started. Let's talk big money. Tesla shareholders just approved a staggering $30 billion compensation plan for Elon Musk, making headlines around the world and sparking intense debate in the business community. This isn't a traditional salary. Instead, it's a performance-based package that directly ties Musk's earnings to Tesla's ongoing success and growth in the market. Musk only gets paid if Tesla hits a series of ambitious targets for market value, revenue, and profit. Goals that push the company to new heights and keep investors on the edge of their seats. The plan is structured around stock options, giving Musk the right to buy Tesla shares at a significant discount, but only if the company performs exceptionally well. It's designed to keep him laser-focused on Tesla's future, even as he juggles massive responsibilities at SpaceX, X, and other ventures that demand his attention. The vote was controversial. Some major investors called the package excessive, raising concerns about executive pay, but most shareholders ultimately backed Musk, betting on his bold vision and leadership. This package is similar to a 2018 plan that made headlines, but it's now worth less due to changes in Tesla's stock price and market conditions over the years. The board argues it's necessary to keep Musk's attention locked on Tesla, especially as he manages multiple high-profile companies and projects. Approving this deal sends a clear message. Investors believe Tesla's future is brighter and more secure with Musk at the helm, steering the company forward. His leadership is widely seen as the driving force behind Tesla's relentless innovation, global expansion, and powerful brand identity. Despite the drama and heated debates, shareholders are doubling down on Musk, showing unwavering confidence in his ability to deliver results. The stakes? Billions for Musk, and the future direction of Tesla as a global leader in electric vehicles and clean energy. But this isn't the first time his pay has made headlines, and it likely won't be the last as Tesla continues to break new ground. To understand the new deal, let's rewind to 2018, a pivotal year for Tesla and its ambitious CEO, Elon Musk. This was a time when Tesla was still fighting for its place among the world's top automakers, and the stakes couldn't have been higher. That year, Tesla's board approved a record-breaking $56 billion pay package for Musk, an unprecedented sum in corporate history. The deal was entirely performance-based, tied to a series of nearly impossible goals, like skyrocketing Tesla's market value and revenue. Against all odds, Tesla hit every single target, making Musk eligible for the full amount. This achievement cemented his reputation as a risk-taker who delivers results, and it sent Tesla's stock soaring. But not everyone was celebrating. A concerned shareholder filed a lawsuit, arguing that Musk had too much influence over the board and that the process wasn't truly independent. The case landed in a Delaware court, where a judge took a hard look at how the package was approved. After months of legal battles, the judge ruled the process was deeply flawed and canceled the entire pay package. The court found that Tesla's board was too close to Musk, failing in its duty to protect the interests of ordinary shareholders and to act independently. This legal bombshell forced Tesla to go back to the drawing board and create a new, smaller pay package for Musk, one that would pass legal scrutiny. The ruling sent shockwaves through the business world, raising urgent questions about CEO power, board independence, and how much is too much when it comes to executive pay. It's a rare and dramatic example of a court stepping in to check the power of a superstar CEO, setting a precedent for future corporate governance. Now, Tesla faces the challenge of rewarding Musk's vision and drive, while also protecting shareholder value and maintaining trust in its leadership. The outcome of this saga will shape how other companies approach executive compensation and board oversight for years to come. For Musk, it's just another high-stakes chapter in his headline-grabbing, unpredictable career, one that's always pushing boundaries. And for Tesla, the story is far from over. The next move could redefine the future of executive pay and corporate leadership. Musk's influence goes beyond business. His politics now shape Tesla's brand. Once seen as a progressive, eco-friendly company, Tesla's image has shifted as Musk voices right-leaning views on X. His public statements and controversial decisions have sparked boycotts and alienated some original fans. Tesla's popularity among Democrats has dropped, while it's gained traction with Republicans. The company now faces a polarized market, with Musk's personal brand deeply tied to Tesla's fate. Every tweet can move the stock price, adding new risks for investors. The marketing team must now appeal to both sides of the political divide. This is a modern dilemma. How much should a CEO's politics shape a company's identity? For Tesla, the answer is playing out in real time. Investors and customers are watching closely. The stakes are higher than ever. While Musk navigates Tesla's challenges, the Trump family is making business moves of their own. Donald Trump Jr. and Eric Trump have launched a new SPAC, MAGA SPAC, tying business to their father's political brand. A SPAC, or Special Purpose Acquisition Company, is a shortcut for private companies to go public. The Trump's previous SPAC helped take Truth Social public, rewarding early investors. With MAGA SPAC, they're targeting companies aligned with their political and business philosophies. Their famous name draws media attention and investors, but also carries risks. Tying business to politics can energize supporters, but alienate others. The Trump sons are betting their brand can deliver another big win. The business world is watching to see if this strategy pays off. It's a high-profile experiment in mixing politics and profit. So what's a SPAC? Think of it as a blank check company. It raises money through an IPO, then hunts for a private company to merge with, giving that company a fast track to the stock market. SPACs skip the red tape of traditional IPOs, making them popular for tech and EV startups, but they're risky. Investors are betting on the SPAC founders to find a good deal. If no deal happens, investors get their money back. If the deal flops, the stock can tank. Sponsors, like the Trump sons, use their reputation to attract investors and targets. If successful, they get a big stake in the merged company. SPACs have become a major tool in modern finance, but not every deal is a winner. Understanding SPACs helps explain why they're making headlines and why the Trump family is all in. Now let's turn to artificial intelligence, where the stakes are billions. CoreWeave, a rising star in AI cloud computing, wants to buy Core Scientific, a major data center operator, for nearly $9 billion. Core Scientific started in crypto mining, but its data centers are now prime real estate for AI's massive computing needs. The deal would give CoreWeave a huge infrastructure boost, making it a top player in the AI arms race. Adam Sullivan leads Core Scientific, fresh out of bankruptcy. Michael Intrator heads CoreWeave, driving its rapid expansion. This takeover bid highlights the convergence of crypto and AI. Old mining rigs now power the next tech revolution. The move is aggressive, showing how far companies will go to secure resources for AI development. If successful, CoreWeave would instantly become a heavyweight in AI infrastructure. The industry is watching closely. This deal could reshape the landscape. It's a sign of just how valuable data centers have become in the AI era. Billions are on the line, but not everyone is happy about the offer. Core Scientific shareholders are worried the $9 billion offer is too low. They believe the company's data centers are worth more in the current AI boom. Some suspect CoreWeave's earlier $3.5 billion hosting deal was a setup for the takeover bid. Shareholders want the board to seek better offers, not just take the first deal. The fact that CoreWeave is private adds to the uncertainty. There's less transparency. Any hint of insider advantage or conflicts of interest is under scrutiny. Major shareholders are voicing opposition, demanding a fair process. The board must act in everyone's best interest, possibly sparking a bidding war. The outcome will set a precedent for future AI infrastructure deals. The battle for control is just heating up. These stories aren't just headlines, they're shaping our future. Musk's pay package is a test of CEO power and corporate governance, with ripple effects across industries. The Trump Sons SPAC shows how political branding is changing finance, blending opportunity with risk. The CoreWeave Core Scientific deal reveals how AI is transforming entire industries and raising the stakes for infrastructure. These leaders' decisions influence the products we use, the jobs created, and the direction of technology. The intersection of business, tech, and politics is more important than ever. We'll keep watching these stories to understand the forces shaping tomorrow. Thanks for joining me. See you next time.